Bitcoin falls below $104,000 as retail investor sentiment returns to Liberation Day levels. Bitcoin dipped below $104,000 following a 4% drop, even as analysts say extreme bearish sentiment from retail may hint at a rebound. Bitcoin, BTC $103, 888.91 continues to struggle for direction amid mounting macroeconomic pressures and a notable deterioration in retail investor sentiment. The asset is hovering near $103,700 following a volatile 24-hour stretch, in which it briefly dropped below $103,400 before staging a modest recovery, according to CoinDesk Research's technical analysis model. This price behavior reflects an uneasy market backdrop, shaped by both geopolitical tensions and uncertain monetary policy. According to an ex-post by crypto analytics firm Santiment on Thursday, sentiment among retail investors has turned sharply negative. The firm reported that the ratio of bullish to bearish commentary has fallen to just 1.03 to 1, the lowest since early April, when the President Donald Trump unveiled his so-called Liberation Day tariffs, triggering peak market fear at the time. Santiment emphasized that this current wave of retail pessimism is unusually intense and, based on past patterns, may mark a contrarian signal for a price rebound. They specifically noted that back in April, Bitcoin rallied shortly after similar fear levels surfaced, suggesting large investors often use periods of retail capitulation to accumulate at favorable prices. Adding to the pressure is the Federal Reserve's recent decision to hold interest rates steady, which has kept Bitcoin trading in a relatively tight $100,000 to $110,000 range over the past month. Meanwhile, on-chain metrics show declining open interest on Binance, pointing to continued deleveraging among derivatives traders. At the same time, whale wallets have shown steady accumulation since 2023, an indication that large holders are continuing to build their positions despite the short-term uncertainty. Technical analysis highlights. Disclaimer. Parts of this article were generated with the assistance from AI tools and reviewed by our editorial team to ensure accuracy and adherence to our standards. For more information, see CoinDesk's full AI policy. Siamak Masnavi is a researcher specializing in blockchain technology, cryptocurrency regulations, and macroeconomic trends shaping the crypto market. He holds a PhD in computer science from the University of London and began his career in software development, including 4 years in the banking industry in the city of London and Zurich. In April 2018, Siamak transitioned to writing about cryptocurrency news, focusing on journalism until January 2025, when he shifted exclusively to research on the aforementioned topics. CoinDesk Analytics is CoinDesk's AI-powered tool that, with the help of human reporters, generates market data analysis, price movement reports, and financial content focused on cryptocurrency and blockchain markets. All content produced by CoinDesk Analytics undergoes human editing by CoinDesk's editorial team before publication. The tool synthesizes market data and information from CoinDesk data and other sources to create timely market reports, with all external sources clearly attributed within each article. CoinDesk Analytics operates under CoinDesk's AI content guidelines, which prioritize accuracy, transparency, and editorial oversight. Learn more about CoinDesk's approach to AI-generated content in our AI policy.